You look, in my opinion, they will continue to side on the side of caution, or on the side of caution also, because I suppose if you really think about not just the Fed, the BOG, the ECB, we are ultimately having too much debt in the world, and raising rates is important. Otherwise, you have even more of an asset-based inflation in the world.
And interesting to note that increasingly the dialogue from the Fed and from the IMF, for that matter, a couple of weeks ago, seems to be about financial stability.
Correct, but the problem is when you already have so much debt in the world and you created you solved the debt crisis with more debt and now you're normalizing rate, at what level, when do you have this tipping point? And that is like the proverbial, the stroke that broke the camel's back. Nobody really knows where that is. But in anticipation of that, the market seems to imply that the economy is stronger, so there's a lot of risk appetite and a lot of liquidity, still actually liquidity-driven rally in global risk markets.
So it's almost as if Callum Henderson was right. The normalization process is like boiling the frog. At some point, the poor old frog will croak.
I think he's right, and in all his credit, remember, he was also very right on the Australian dollar when nobody wanted to hear that. But again, with all these things, it works until it doesn't. And again, this is the question, again, we're seeing in markets. There's a tendency sort of to ride the wave while it is going. But I think now at these levels, the wave is potentially at a level where it potentially could flip over, potentially next year. So again, the risk levels are elevated, but at the moment the market doesn't seem to care because it's sentiment driven. But
I agree with you. There's just so much momentum, and let's just talk about that in a bit more detail, Michael, because you have this amazing momentum rally. You have a lot of passive investors. You have a lot of ETF products in the market. What's going to force the correction? Is it going to be a policy error? Is it going to be something coming out of left field, a black swan event? What is it going to be?
That's a very good question, and the media often talks about sort of a catalyst, but sometimes markets just roll over. The catalyst, or what the catalyst was supposed to be, is often created after the move. But I suppose it has to do also with, I suppose, positioning. And I think one thing that is noteworthy is that New York Stock Exchange margin there is the highest it's ever been. And also retail participation at this stage of the equity market is even higher than in 2007 or in 2000. So again, this is from an institutional investor's point of view, that's actually not a positive sign. It's actually a sign for caution, right? And don't forget that things usually look best just before they turn.